The last time I used this strategy, I bagged a 19-hour trade. This EURUSD setup looks just as promising. And in this video, I'm going to walk you through my exact thought process, my entry, my stop loss levels, and my potential take profit levels right here. So make sure you watch to the very end as I show you everything step by step. All right, so let's get into it right now. All right, so we have right now a beautiful setup on EURUSD, a potential 1 to 21 risk reward ratio right here. So what you can see is that we have a nice QML, we had a low, we had a high, and a break of structure to the upside right here. Apart from that, we are also left behind with some sort of liquidity right here, which is relative equal highs right here. So right now, what we're anticipating is for the market to come back to actually take out the liquidity and then come into our area, and then we'll be able to actually look for our entry signal and confirmation, and then we'll be able to execute this to the downside right here, targeting these lows right here. But why am I thinking of actually selling this particular market? Now let me show you exactly what is looking at right on the higher time frame. So let's go to the 4-hour time frame and see what is happening right here. So on the 4-hour time frame, you're going to realize that the market for some time was in a bullish state. The market was making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, and then we reached this level right here. So what happened here? The market broke this level to the downside. So what does that tell you? It tells you a potential change of market direction. So once we have a break of structure like this, it means now we have a potential trend to the downside, right? Because this significant low was violated. So what did you have here? So we saw the market now continue to actually now give us lower lows, lower highs, lower lows, lower highs. Now let's go to the 1-hour time frame. So that trend to the downside continued, right? So we had a lower low, lower high, lower low, lower high, lower low, lower high, and that trend continued to the downside. Okay, we had a lower low, lower high, lower low, lower high, lower low, and then we had a lower high, then lower low, lower high, lower low. But however, something significant happened right here. Why? Because we had a nice big momentum candle which was actually formed at this level. We had a QML low, high, high, and break of structure, and the type of candles that broke this structure are very significant candles. So whenever you have such type of candles, it means that there's a very high potential chance of actually the smart money guys being involved, because we cannot move the market like this. So usually these guys cannot take all their orders at once, therefore they leave some unfulfilled orders at that particular area. So it's our hope that the market now goes back to that particular area so that we can actually tap into those unfulfilled orders, so that the market can actually continue to push the downside. So right here you can see that we had a nice rally base drop. Now let's go further to the lower time frame and see what is happening right there. Okay, now let's go to the 50 minutes time frame so that you're able to actually see clearly what is happening and what is price telling you. Okay, so right now this is what happened. So the market first left as this order block right here. However, you can see that the market retained and actually tagged into that area, so making this area not valid anymore. You can see the market actually went to the downside, broke structure, and then pushed back into this area, and then this is the level that was responsible for this push to the downside. Then what are we left with? We are left with this order block, which is fresh. So it's very, very important for that level to be fresh, because the more fresh the zone is, the higher the chances of the market actually respecting that level right there. So we have a QML, we have a low, we have a high, and we have a break of structure, actually multiple break of structures to the downside. Okay, let me show you on the 3 minutes time frame where this liquidity is right here. You can see that the market gave us this low, this high right here, and then which is acted as resistance to this level right here and caused the market to push the downside. So because of that, we have a valid liquidity area which needs to be taken out, and then you can see from there the market gave us very lot of break of structure to the downside right here. Because of that, we are now anticipating the market to push back into this zone. Then once the market has come into my zone right here, guess what? we'll be able to actually share this as a signal in our private community after waiting for our types of confirmation. And like I always do, I'll just set an alert right here, and then I'll wait for the market to come to my area, and then I'll assess and make a decision whether to actually enter this particular trade or to just stay away. Remember, there are two types of entries. We have an aggressive entry where the market just comes here and it just gives me a nice rejection on the lower time frame, and I'm able to execute. Why? Because that has advantages as well, such as not missing out on trades, because I've seen it several times where the market just taps into your area and then doesn't give you any change of character whatsoever, and then the market just leaves you behind. For me, I would rather take that chance because I trust my setup. In the long run, I'll make money. I might not make money on this particular trade, but I know if I continue to do that, there's a very high chance that I'm going to make money. My risk is very, very small. It's like 5 pips, right? So I get to be proven wrong early, and like trying to wait all that long just to be stopped out with a 25 pips stop loss. All right, so I like to be wrong early so that I exit, and then I look for other opportunities. Otherwise, this looks really, really amazing. One, we are actually trading in the direction of the recent market price action. As you can see, we are bearish right now. From this particular point right here, the market has been delivering a bearish scenario, and then we have a very, very solid setup right here where we're given a very A plus kind of a setup right here. And for now, it's just a waiting game and to see how the market delivers this price action. And we have our alert in place right here, and once that has actually been triggered, we'll be able to actually make a decision whether to enter into this particular trade or not. And for my take profit, I've just I'm targeting this low right here because I'm anticipating that the market may continue to push the downside to further notice. And for my stop loss, I've just put my stop loss just above this high right here, which is the 5 pip stop loss, and my target is 115 pip stop loss, and then making this a potential 1-21 risk to reward ratio, which is absolutely amazing. All right, so I just thought I'll actually share with you this particular setup, and like always, these have already been shared in our private community right here. And if you'd like to get involved and actually join us, make sure you check the links down in the description so that you're able to actually take advantage of this when the market actually comes to our area. All right, so I hope you found value in this video, and if you have, make sure you subscribe, like the video, comment in the comment section. Until next time, goodbye.